Here from quantlabs.net. Today I'm going to show you something we call the Portfolio Manager and how you can use it to maximize your profit potential with any asset class. Specifically in this case, the example I'm using is obviously cryptocurrency. So let's get to it. So if you go to my YouTube channel, youtube.com/quantlabs, if you do a search on the, and let's say portfolio, or let's say optimize, would be better. You'll see all kinds of, maybe portfolio might be better, or portfolio opt, I don't know. Okay, so let me just try this again, portfolio optimizer. Okay, should be lots of videos on, oh, here we go. Okay, so we have portfolio. If you do a search on portfolio, I guess, you can see that lots of videos and showing you how this can be done. Just do a search on that. Okay, so let me show you what gets generated and how it works. Okay, so these two things, portfolio ranking, don't work as of yet, but eventually it'll have to be. So when you go into the report that you're hopefully used to on the longs, and remember I'm only using Binance for cryptocurrency. The only thing you can really do is long, and that means I'll show you in a minute what we can and cannot do. So if we go into this one, cryptolong.docx, in there you will find the usual reports. So we have here buy signals for nothing. Let me maybe interesting. Anyways, let me just pull up this guy, or maybe I'll just show you an example. Okay, so these are reports. So we have the usual buy signals for whatever, and then what will happen is we're working with two pairs. So in this case, we have three different suggestions or buy signals for, and they're sorted using the normal way. So we have BCH BNB, XZC BNB, and LTC BNB, all from the Binance. So if we load up these, if you watch those videos on portfolio optimization, is no different. The only difference is there is no, so here's the strategy types we can do. Minimum variance portfolio long only, and the only other one we can do is Markowitz long only. There is also, if you could do shorting, you have a minimum variance portfolio long short as well, Markowitz portfolio long and short, as well as we can have a fifth type called Markowitz portfolio market neutral. So in this case, because we can only long only, that's all we're using for now. So how does this work? So basically we have our portfolio optimization. We're using returns over the last 30 days. I find 60 days because there's a lot of volatility. I just figured for now I'll just use 30 days. So this is the expected returns. Here's the average returns, and this is really important to understand this. You can see here that both these cryptocurrency pairs will give you negative 0.003% return. Now these have not been properly, so it's really 0.03% moves, or negative 0.03, or negative 0.03. So I left those as is, but you can always just multiply them by 100. And then also, if you were to do a covariance, what would you expect with the returns? This is the expected Sharpe on the performance. And then here's the more important thing is that if we were just to use minimum variance portfolio positioning sizing only, if we had anything, here's the expected return using this combination and using this as a sizing. For instance, BCH BNB set on a position, whatever your total capital that you're willing to put at risk, you deploy 83 or 84% to the first cryptocurrency pair, which is obviously BCH BNB, and then you would apply the 16% of the remainder of capital that you're deploying at risk for the day on XZBNB. So that's what the optimal weights are, meaning on the percentage. This is the expected return if we did that. So here we have an expected return of negative 0.03, which is not good. So why even bother taking the chance on deploying capital if you're expecting your return to be negative? Okay, so here's the variance of that. This is the performance using the Sharpe, Sortino, and target return, which are obviously not that good. Now, the difference between Sharpe and Sortino, when we have volatile pairs as a group or individually, we always prefer to measure with the Sortino, because the Sortino will measure same kind of deal as Sharpe, but the Sortino also factors in the volatility. So if you have a fairly volatile group, you may want to focus more on Sortino. Now, if we did just the minimum variance long only, fine. Here's a Markowitz portfolio. So again, if we have our optimal weight set at BCH-BNB at 83% or 84%, our XZC-BNB at 16%, this is the expected returns again. You'll notice here we have negative 0.03. Again, you don't want to deploy capital if you're expecting a negative return. So again, our variance, again, our expected Sharpe and Sortino, and that is pretty well it. Now, will it improve if we measure it against 3 assets? So in my case, let me just go back. So in here we have a third one measuring these 3 cryptocurrency pairs. So we got BCH-BNB, XZC-BNB, which are the previous 2. Now we're adding Litecoin, LTC-BNB, and now we'll be able to see if maybe adding that third one would improve the performance. So we've already gone through this. I'm not going to go through this. Yeah, it looks like, no, it hasn't added the third. Oh, here we go. So here's our portfolio optimization, our covariance between the 2, average returns, they're all negative. Minimum, again, optimal weights, if we, for the capital to deploy that trading day, and again, this is a measurement of the overall performance of each of these cryptocurrency pairs. So to get optimal, but again, we're getting a negative, but it's a little better than before. So if we apply 44% to BCH-BNB, 12% to XZC-BNB and LTC-BNB, we can expect hopefully to get a 0.02%, but it's negative. And again, this expected ratio and this expected Sortino, which gives you target return, which is not very good. But if we did a Markowitz portfolio long only, what would we get? Here, it's not much better. It's still negative. And the Sharpe doesn't really improve. So all in all, no matter which portfolio optimization you would want to do, I would say it's not a really decent day to deploy capital, because if you're expecting negative returns, no matter which one you do, no matter what cryptocurrency pairs you apply, you're still going to get negative. So I'd probably sit it out for that day. And this is how I plan to do it. I can easily run this report, which generates the standard crypto long and all that. I could do it daily, every couple hours or so, but we'll figure it out. Just depends upon when the overall asset class of cryptocurrency goes positive. Hopefully I'll help you out. We shall talk to you later. That's how you can maximize your profit, by going through here and looking for your maximum expected returns based upon your position sizing for each of the assets you want. And again, we could experiment with the look back of 30 days or 60 days or whatever you want. But in my case, I'm only looking at 30 days. But I might do another session of 2 weeks and to see if that improves anything. Hopefully this will help you out. Talk to you later. Hi everybody, Brian here again. So I have changed the look back measurement on the portfolio optimization from 30 days down to 7 days, because if you are, based upon, if you've been watching all my analysis with the crypto recently, and how the cryptocurrency asset class has been getting hit very hard. I think 30 days is too long, so I have something more beneficial. So I changed the look back measurement from 30 days down to a week, because usually there's some positive movement on a week. So I'm using, again, 7 days. So here we have two currency pairs as before: BCH BNB, XZC BNB. Once again, here's the weightings that we could use. I'm sorry, right here. But what you'll notice here is we have now a positive expected return of 0.002%. So that's a lot better. Here's our Sortino at 0.5. That's expected. And again, that is just using minimum variance long only. And again, Markowitz long only. Expected return is now at 0.06. So if I was to just change the weightings to this, meaning BCH BNB at, let's say, 30% and XZC at BNB, I should get an expected return of 0.06% as opposed to the 0.02%. Now, always remember, this is only two cryptocurrency pairs I'm doing. So if I go further, what you'll notice here is now I've added a third, which again, we have BCH BNB, XZC BNB, and now we're adding LTC BNB. So here's our using the minimum variance portfolio long only. So our expected return is at 0.002%. So we're still wanting to beat 0.006. So again, with this one for the Markowitz long only 3 assets or cryptocurrency pairs, we only get 0.004%. Or sorry, 0.04%. So the maximum we can get after all this analysis is using the very first one of expected Markowitz Portfolio long only of 0.06%. That's our maximum among the 4 different ways we can scale, or sorry, position size among the 2 different strategy types of the Markowitz Portfolio long only or the minimum variance portfolio long only. So again, our best way to do it to get a highest expected return is using this strategy. So our optimal weights will be 0.3%, sorry, 30% for BCH BNB and allocate XZC BNB as 70% for your daily capital deployment that you're willing to put at risk for that day. Hopefully you'll get a better idea how this works, and let me know what you think, and we shall talk to you later. This is how you get maximum potential profit return by just adjusting your weightings for optimal weights, as well, you know, basing it upon either minimum variance or Markowitz long only. And again, we can't use short or market neutral because we can't short on Binance. Hopefully this will help you out, and we shall talk to you later. Bye.